Good morning, Patrick. I'm going to make you the presenter now, and looking forward to our conversation. Welcome to F.A.C.E. I'm not sure if you want to share a screen. If not, I could show your website. So,
yeah, that's better. I don't have anything to show.
Okay, well then let me do that, and so people could take a look at it. And while we're speaking about low blood pressure, and right, according to the recent writings that we've had, and I should probably pull up yields, since that measures, at least attempts to measure, economic activity, along with all the other false central planning things that go into the bond market. So to you, in your recent writings, the economy is taking too much lisinopril. Is that correct? Because I take that for high blood pressure.
Taking too much lisinopril would make your blood pressure drop too low, I guess. I'm not a doctor, but it seems like that's how it would work. But yes, so in the very big picture, we are late in the economic cycle, so we would expect to see some weakening at this point. We have seen some efforts to stimulate the economy with tax cuts and most recently the Fed slowing down its rate cuts and ending its quantitative tightening. However, we also have other things going on, one of which is a trade war or attempts to start one. And so looking back over the last year or so, what happened was it was early 2018 when Trump began rattling cages. He put tariffs on washing machines and solar cells, and then that progressed to steel and later other things. And business managers and owners are not ignorant of these things. They see what's happening. They see that it's going to become harder and more expensive to import the things they need, both components to build stuff and
so they they did a lot of front running with their ordering. Is that the point you're getting to here, Patrick?
Right. So people accelerated their orders, and what that created was a bubble in shipping of all kinds of goods. So we had ports clogged, we had trucks on the highways, all this activity. But this was not new demand. See, this was 2019 demand being shifted forward into 2018. And that caused this giant boom in transport and imports. And that is now reversing. So the warehouses are full. Businesses have inventories very high. We're seeing lots of anecdotal data that businesses are now wanting to reduce inventory, and that means we're going to see less of this shipping activity. We're going to see more price discounting. We're going to see less need for truck drivers and warehouse workers and all these other sort of things that boomed last year. So that doesn't mean recession is imminent, but it's a pretty bad sign.
Okay, so I know it's your mission at Malden to explain these economic conditions and keep your finger on the pulse of what's going on, Patrick. Is there anything that you guys do, or your subscribers or clients that want to know what they should be doing, positioning their money in the markets conservatively during this time frame? Because it sounds like at the minimum, you guys are looking for at least a slow patch, and kind of an unusual time of the year for it to happen, isn't it? In the summer, usually things are humming, and maybe things slow down again, after Christmas. So is this an unusual seasonal period for a slowdown?
Well, we're approaching the time when a lot of retail businesses have to start putting in their orders for the holiday periods. And then
that early, yeah.
Right, and then the Asian factories start producing all the things that are going to be imported, and it finds its way over here, and inventories start building toward the end of the year. But right now, the inventory is already there.
Right.
So, and if you did import more stuff, where would you put it? So that's a problem. But
let me ask you this: with, I've read reports that even though the president hasn't shut down the border with Mexico, that there are all kinds of log jams of goods and services trying to get, and lines, miles of lines of trucks that normally used to flow through easily that aren't anymore. I'm not sure what the reason is, but is that having any impact on the economy? And if the border is shut, what kind of impact would that have on economic growth here in the U.S.? And would we be paying more for a lot of things that we're not right now?
Yes and yes. It is having an impact, not catastrophically so yet, but what's happened is they've diverted some of the personnel away from the checkpoints where trucks come in to dealing with refugees and migrants and so on. So that's caused some slowdowns. But yes, if he were to follow through on completely shutting the border, that would be catastrophic, because you've got the California agriculture economy depends on migrant workers who come across that border legally. You also have factories all over the Midwest who depend on parts that come across that border regularly, and they don't keep very much on hand. So within weeks, you would have factories in Michigan and Wisconsin closing and laying off people. It would happen very fast.
Okay, so therefore, it's only rhetoric, and it would really be kind of shooting himself in the foot if the president did that, being a year and a half away from presidential elections, don't you think?
Well, he's hard to predict, but yeah.
Maybe Melania can predict him. How about the fact that, I have some bearish views on, some of the things that are about the economy, like copper, which makes me think about not the U.S., but China. Do you guys do any coverage of global economic conditions and what could be possibly affecting what's happening here in the U.S.?
Yes. So China had been slowing down. It was in December. Their credit growth took a big dive. That is reversing itself. So in our view, things are looking up in China a bit, at least in the near term. Now, they have some very significant structural problems that are eventually going to bite them. But that does affect the U.S. because that affects the way China responds to all these trade negotiations that are ongoing. They believe. So
it gives them a stronger hand because they're recovering. Because, yes, the big point going into it was, their markets were under severe pressure. Shanghai F.A.C.E was making new lows while our markets were still pretty buoyant. You think that condition is reversing?
Yes, they're in fine shape, and time is not on the U.S. side here. See, what people are forgetting is this is not a real trade agreement that anyone is talking about. Real trade agreements have to pass through Congress. Everything Trump, and then there's no chance of that. What Trump is doing is executive actions. So right. Anything, even if he makes
what he criticized Obama about doing too much of.
Right. So even if he makes a deal, a new president in January 2021 could end all of it. And okay. So China can rightly figure we can write out anything for another less than 2 years. So there's time is on their side.
Okay. Does that make you think that they won't hand at least a symbolic victory to the U.S.?
If there's some kind of agreement, it will be mostly symbolic and superficial. Okay. They may agree to buy some more soybeans or something.
Okay.
I don't see it. They're not going, in my view, they're not going to solve the structural issues around intellectual property and
right.
business interference and those things.
Okay. Does the value of the dollar come into play in your analysis at Malden?
Yes. Well, in my personal analysis is I'm bullish on the dollar.
Okay.
And the reason for that is I see exports falling. Sorry.
Okay.
And that's going to result in fewer dollars in circulation overseas, which is going to drive the price of the dollar higher.
Okay. Anything you can see, because that's going to be looked at as deflationary and a problem. Is the only way, and I'm looking for sharp, before it's over, I see the Dixie over par. Is the only way we could reverse the flows in the dollar and shift trend for the Fed to launch another QE mission?
Well, I don't know if it will have that effect, but I think that's probably what they will do.
Okay. Do you think with what you're describing in the economy that it's going to happen by the end of the year? When do you think we'll start getting numbers that the rest of the market will recognize as economic weakness, that you guys are ahead of the curve and it's really not the narrative right now, is it? The narrative is the U.S. economy is humming along, correct?
Yes, I think we'll see more, just kind of a gradual weakening the rest of this year, and chance of recession rising considerably in 2020.
Okay.
Beyond that, I really think we are headed toward a Japan-like scenario.
Interesting.
Long deflation.
Okay, so do you think that treasuries or any other type of interest-bearing instruments are going to be the place to be? Do you like the 30-year bond at these levels? Or is it even possible that what you're talking about could eventually drive rates up, not because of a humming economy, but just because of lack of demand for our paper?
All right. Well, I am generally, and I should say I am not a trader. I don't know what's going to happen tomorrow or next week. You have
right.
Lots of experts.
Who does?
Than me at that.
You're not Nostra Wilson?
No, afraid not.
Okay.
However, I do see long-term interest rates going lower rather than higher.
Okay. All right. And we've had a pretty good, one of the partners here at ForexAnalytix, we've had a real nice recovery in not just the market, but in the energy market and crude oil from low 40s to mid 60s right now, taking Iranian oil off the market. To me and to Blake, it sounded like, that's not going to help the consumer. I have friends that already are complaining about high gas prices, and they just had to, put a 100 in to fill their tank. Could that also be part of the slowdown scenario you're talking about?
Well, it's not going to help.
Yeah.
And I'm puzzled here at what they're thinking. If you're the Trump administration and you don't want a recession, then policies that raise oil prices are not the way to do that. Right.
Well, they think they could manipulate everything, and that the Saudis and other producers will make up for that Iranian oil output. I guess we're going to find out.
That may be what they're thinking. I don't know if that can happen.
Okay. And any view on gold as a store of value in these times? Personally, I know that there's company opinions and you have your own. Do you have a view on it at all, Patrick?
Long-term bullish, and I say that because, like I said, I think we're headed toward a worldwide Japanification scenario, and Japan has survived as well as it has because it's been able to depreciate its currency.
Okay.
But it's not, just math says it's not possible for everyone to simultaneously depreciate their currency. Something has to rise in opposition to that. So
right.
What that would be, could be Bitcoin, could be gold. I don't know. Some other assets are going to have to start attracting the capital that's going to leave fiat currencies.
Okay. So I really appreciate you coming here after the holiday. Any thoughts that you want to wrap it with? I mean, we know that any agreement, according to your view on trade with China, is going to be strictly symbolic. Do you think that after a symbolic agreement, there's already talk about turning towards our allies in Europe and having some type of tariff action on automobiles? You think that could happen?
One way or another, the trade tension, whether you call it trade war or not, it's going to continue in some fashion. If we reach some agreement with China, then Trump is going to pivot to auto tariffs on Europe, or and this new NAFTA thing, USMCA they call it. That's nowhere near passing. It has to pass the legislatures of all three countries, which is not imminent.
So we're operating, North American continents are operating really without a trade agreement. They're just operating without one right now, correct?
Well, no, the old NAFTA is still there. All those rules.
Oh, okay. Okay.
That hasn't changed. Trump has talked about pulling out of it, and it's legally unclear whether he can, but he might try, which would be chaotic. But yeah, trade tension is going to continue in some fashion.
Okay, so really, being a little bit of a student of history, I know Smoot-Hawley was legislation, but is there really any difference between it being legislated and being done by executive action? Won't it have the same type of outcome, and it wasn't so great in the 30s?
Well, it's somewhat better because, as I said, if Congress hasn't legalized it in statute, then it can reverse it. The president's term does.
Okay. So we could weather another year and a half of this type of stuff.
Right. Maybe. Or Trump could be reelected and it could go on 4 more years. No one knows. So there's less certainty than there is for Congress to be in on this.
Okay. So why don't you tell us a little bit about Malden and what you provide for subscribers? Are you mainly institutional, or do you have retail people coming to you? Blake Morrow comes here to read your stuff as a resource. What's your business model here at Malden Economics?
Well, we publish a lot of economic analysis, and what we try to do is explain things in ways that people who aren't specialists, aren't professional economists or traders can understand. And our founder, John Malden, is very good at that. And I try to help a little bit. And our subscribers and readers tend to be financial advisors, high net worth investors.
Okay.
And we have several subscription services. We have a lot of content that's free. So people can go to maldeneconomics.com and they'll see that from me and other people.
Okay, Patrick, can we just, I just noticed this, and it's been in the news with President Trump's 2 nominees for the Fed. What does Malden, what's his first name, John?
John.
Yeah, what's John saying about that Trump may regret his Fed takeover by nominating Steve Moore and the guy who said, I think, number 9 or something like that. Godfather Pizza guy. Why will he regret it?
Well, that was an article I wrote a week ago.
Oh, okay.
And my point there was that there's not a lot of good outcomes here for Trump, because he either succeeds in getting the Fed to do what he wants, in which case it is no longer independent, or he fails, in which case he looks weak. So, because he can't even make the people he appointed do what he wants, right?
Yeah.
But the reason I said it could backfire is the most recent example we have of this was Nixon getting Arthur Burns to cut rates before the 72 election. And then we went into recession, their stocks crashed, then that all led up to Paul Volcker having to clamp rates down to stop inflation.
Yeah, the liquidator.
Yeah, which was horrible, and neither Ford nor Carter was reelected because of all this. So it did not work out the way Nixon thought it would.
A lot of things didn't work out the way he wanted them to.
Right, and
anyway. I really recommend guys, to go here and read the stuff that John and Patrick, and you have other contributing editors as well, Patrick. The content is edifying is the word I would use, and open your eyes to things that, you know, you normally don't read about on Twitter or read about here on the, you know, CNBC or Bloomberg. So, Patrick, I really appreciate the way you guys dig in under the surface for things that most people don't notice, and most people are ostriches with their head in the sand. So, thanks for your mission of trying to alert people to not be blindsided with what may be ahead around the curve.
Yeah, well, that's what we try to do. So good to hear that. We see it as our pleasure.
Okay, buddy. The video will be out in a couple of hours, and I hope that on this winding road in the economy that you guide everyone well so they get to their destination. And thank you, my trading warrior brother. I know you don't say you're a trader, but like it or not, you're my trading warrior brother, Patrick, and appreciate having our conversation today.
Wonderful. Our pleasure. Have a great day.
You too, Patrick. Okay, everyone. So Europe will be back. We'll all be back in full force. And remember, don't just count your pips, count your blessings. And see everyone tomorrow. Adios. Thanks again, Patrick. You're welcome, Eric.